What are Vanguard up to? Let's discuss what's going on, who it impacts, and what you can do about it if it impacts you. I also think I need to sit here and acknowledge that I probably made a mistake with this. So I reacted to the news on the day it dropped, but I did that on financial interest. It's one of the channels I own, and the purpose of that channel is to cover broker-specific content that is too specific to talk about here. Any big news like this, we try to cover the same day on that channel. I did a community post to mention that I was reacting over there, but I'm still getting tons of messages all the time asking me my thoughts and if I'm going to react to the Vanguard news. So my mistake was not considering how few people knew about that side of the business really, and just not considering that this channel was built on Vanguard content in the early days. So I'm sorry that I'm late to this and that I didn't react to what is a massive change in Vanguard's service. So let's go through this step by step, starting with the changes. This is the communication that Vanguard sent out, the headline being that from the 31st of January 2025, they will introduce a minimum fee of £4 a month or £48 a year. The fee is calculated across portfolios, so if you have less than £32,000 invested across a SIPP, general investment account or stocks and shares ISA in total, your fees are going up. I've got a few issues with this, but I'll start by saying that I don't think giving people 6 weeks to switch before implementing a fee change is all that fair, especially at Christmas, right? So, Vanguard are about to be inundated with transfer requests at a time where a lot of their staff are going to be on annual leave. People are already being critical about the speed in this department. The fee changes themselves affect some heavily and others not at all. On screen is a table that shows how the changes in fees affect different portfolio sizes. So here is their current annual fee, and here is the new fee, and what that looks like as a percentage increase. The fee increase here on smaller portfolios of around £1,000 is massive. I'm in a Vanguard investor group on Facebook, and the conversation around this has obviously been significant. But individuals have been telling investors if they can't afford the fee increase, they shouldn't be investing, and shaming people for being concerned about fees at these levels. I'm sorry, but I just couldn't disagree more. Everyone has a right to invest. And those with, say, £100 a month or less to invest arguably need the stock market more than someone with thousands a month. What Vanguard has done here to those small portfolios is essentially destroy any chances of growth in real terms of their portfolio. Let's say the market grows by 8% a year, but inflation is 3%. So in real terms, you've achieved 5% after accommodating for inflation. Now Vanguard, if you're investing £100 a month, is taking 4% as well. So what's left? These fees, as shown by the table, target smaller investors above anyone else. And now Vanguard, a platform founded by a man who criticised the fees charged by traditional finance companies, to these smaller investors are now as expensive as some of the more pricey money managers and financial advisor services here in the UK. Look, a bit of balance here, okay? So fees are not everything. They are, of course, important, but there are other important aspects of a broker service. So one would be the service. And I know a lot of pushback will be, well, Vanguard offer a really good level of service, high standards. I can call them, I can speak to them, whatever. So I'm happy to pay a higher fee for those service levels. But I do just want to point something out. The UK platform has been riddled with complaints of poor service, which has led to Vanguard paying out compensation to customers. I mean, maybe that's why the fees are going up. Internationally, Vanguard has also been criticised for their abysmal service. Maybe it's the smaller investors that pile the most pressure on services and resources, and as such, Vanguard is making them pay to try and put them off. Another common pushback that we get in response to this is, well, this is the consequence of having an app. You asked for it and now you've got to pay for it. Can I remind you, though, that the American platform has had an app for years and offers well more in terms of service to its owners. The American investors own the funds over there. In the UK, we do not. And their fund fees and platform fees are much cheaper. The US platform now is a very different beast to the UK one, and I think they appear to be heading in different directions. Vanguard UK, at the same time they raised fees for smaller passive investors, cut the fees on their managed services. At first, I thought they wanted to get rid of these smaller investors altogether, and this fee was a way to cull them. I thought, this is pretty short-sighted of them, as these smaller investors will become bigger investors one day. But then I saw they hadn't changed the fees on junior ISAs. So it does still appear that Vanguard have an appetite for smaller portfolios that are going to take years to reach any sort of size. To me, it feels like Vanguard are instead trying to push their managed services to these smaller investors. Maybe this is born from the sense that these newer, smaller investors need more support and, are making bad decisions when it comes to investing. I don't know. Vanguard themselves say that they're raising the fee to help them cover rising costs of maintaining service. Again, maybe it's these smaller, newer investors where all the cost is. I can't be certain really because this is all they gave us. But what is certain now is if you're with this platform and you're about to see your fees increase by hundreds, if not thousands of percentage points, you'll likely be considering what your options are. In the modern investing environment, we will need to be more nimble and selective and reactive to fees, I believe. I suspect that the platforms that are the best value today won't be in 5 or 10 years. And we just need to move with the times to ensure that we're getting a good deal. And for smaller portfolios, now Vanguard is not a good deal. Below I've included a breakdown of the best SIPP and ISA providers compiled by my team at Financial Interest. We update this often as the deals do change, but let me just run you through some of the best alternatives now for both SIPPs and ISAs. I'll link them below marked under SIPP and ISA so they're easy to see for you. Some of them are affiliate links, and what that means is if you use that link, I get a commission. It won't affect the service or cost to you at all. I also need to let you know that when you're investing, your capital is at risk with any provider you use, including Vanguard. Currently, the cheapest SIPP on the market is with InvestEngine. They recently cut their product fee from 0.15% to nothing. That's the platform fee, fund fees still apply. And in light of the Vanguard situation, they've announced that they're going to allow transfers from Vanguard SIPPs into InvestEngine SIPPs. This is something they didn't offer a couple of days ago. The transfer process is simple. Once you've opened a SIPP with them, which takes about 5 minutes, click on the pension itself, then click on Transfer a Personal Pension, and then follow this process here, which is pretty self-explanatory. While InvestEngine offers the lowest fees on the market, their SIPP product is pretty new, and as such lacks a couple of features that I think it's really important to mention because it will rule some of you out. So they don't support employer contributions. They do say that that's coming though. They don't support drawdown either yet, and you can only transfer from Vanguard, no other platform. I suspect all of this will be resolved in time, but if you're looking for good alternatives that have those features now, AJ Bell, HL and Fidelity are all well-established good options. I never thought I would say that Hargreaves Lansdown was a better option than Vanguard for new investors, but here we are. Fidelity becomes more attractive at higher balances, though please note that their fees are so low because they have a £7.50 monthly cap on exchange-traded instruments or ETFs, and for other types of investments they will be significantly more expensive. These all cost more than InvestEngine, but they have those features that InvestEngine doesn't at the moment. With stocks and shares ISAs, so InvestEngine does have a really competitive offering here, and it's probably the closest in terms of look and feel to Vanguard if you're looking for a fund-only platform. I use Trading 212 though for my stocks and shares ISA, as I like the flexibility when it comes to buying both individual companies and funds. They offer a free share on sign-up when you deposit £1, and they've hinted at a SIPP with the same low fees, but it hasn't arrived yet. Like I said, they're who I use for my stocks and shares ISA currently. They've been the provider of choice for me for a few years now. But instead of going through every option in this video, I'll link the Financial Interest article below for you in the pinned comments. I'll also link a video in the end cards that gives you thoughts on the best stocks and shares ISA providers at the moment. I made this earlier in the year, but it's still relevant apart from the Vanguard section, of course. I want to say it again though, I think the landscape on who are the best brokers will change year to year. But the new ISA rules have made it much easier to transfer in and out, and we should take advantage of this because fees are one of the only things that investors can control. I want to remain fair to Vanguard here. I think they've done so much for investors over the last few decades, and I still hold pretty much all of my net worth in their funds, and I don't see that changing anytime soon. I believe their UK platform still offers a reliable way to invest for those with larger portfolios. I was critical of the UK platform in the past because, to be blunt, it's cheaper to buy their products through competitors' platforms than it is through theirs. I honestly thought that the fees would come down, but, this happened. And what they've done is directly target those with the least amount of money with insanely high fees. I've included Vanguard in the description of basically every video I've ever made on this channel. The second video I ever made showed people how to get started using the Vanguard platform. I got started using the Vanguard platform. I've never once been paid a penny to make content by them in any way. I discussed them as I felt they were a great place for people to start. But these fees changed that. I can no longer sit here and say, if you're just starting out on your investing journey, that Vanguard is somewhere you should be putting your money. It's simply just not good value to anyone with a portfolio below, say, £30,000. I also think it sets this worrying precedent of raising fees on passive investing and decreasing fees on managed services. That, to me, just doesn't feel very Vanguard. You might disagree. Here's the video on the best stocks and shares ISAs. And here is the Financial Interest channel if you want to subscribe to that to get the same day reactions on this kind of broker stuff in the future. And then also I'll pin all of the web pages and everything below in the comments, like I said. But yeah, again, I'm sorry I'm late covering this, and I'll speak to you before Christmas anyway, and I'll see you soon.